Chapter 5 deals with banking, and Part 1 is banking and financial services. The learning objectives will be I'll be able to explain the purpose of the Federal Reserve and be able to distinguish between the types of financial institutions. Here are some key terms. As you look through them, you had a chance to define them earlier. As you look through them, there will be some that are familiar to you, and hopefully by the end of the chapter, both parts 1, 2, and 3, you'll understand these. The banking industry. Banks are a business. They sell services such as checking and payment accounts, savings accounts, loans, investments, and insurance, among a few things that they sell as services. They are regulated very strictly. If a bank fails, thousands of people are affected by it. So again, they are regulated very strictly. People and the government watch over them so that they do things right. Banks pay depositors interest. The interest a bank pays is lower than the interest it charges borrowers, and this difference is the bank income. So for example, I can go borrow money to purchase a house or car or something like that, and I might pay an interest rate of 7%. Okay. I also may put some money in savings or an interest-bearing checking account, and I may get interest. I may get interest of 2%. So that difference of the interest that I'm paying for my loan, which is 7%, and the amount I'm receiving for my savings account is the bank's income right there. Okay, and that's how they make their money. One way of making their money. Other sources of income for banks are fees for credit cards. All your credit cards come from banks, and the interest they charge and the fees they charge for those credit cards are a source of income. Some checking accounts require you to pay fees. Fees for using the credit card, not only for the credit card itself, but for using it. Using the ATM, sometimes there's fees attached to that. You may have fees for transferring money. There may be fees for helping you create financial plans, and there may be fees or other sources of income from the bank because they charge for investment and securities. The Federal Reserve, it is a bank for banks. As an individual, you cannot open an account there. It is a bank for banks. It's also known as the Fed. So a lot of times if you listen to the news and stuff, they talk about interest rate and the Fed. It is the Federal Reserve. The Federal Reserve System supervises and regulates member banks, and it helps banks serve the public efficiently. All national banks are required to join. A lot of your national banks will have the word national in them. First National Bank of wherever. Okay, they are required to join the Federal Reserve System. It is an option for state banks. They're not required to, but again, if I was going to go into a bank and they're not part of a Federal Reserve System, I probably wouldn't put my money there because then they are not supervised real strictly. And an example of a state bank was sometimes you hear First State Bank of North Dakota or whatever town. Okay. So all national banks are required to join state banks. A member bank is a bank who has joined the Federal Reserve System. The Federal Reserve System is divided into 12 districts across the United States. Okay, and it looks like this, and you can see that our district is right here. Okay. The United States, again, is divided into 12 Federal Reserve districts with a central Federal Reserve Bank in each district. And you can see our Federal Reserve Bank is Minneapolis. What happens at that Federal Reserve Bank is this is where the district prints some of its money that we use and keeps it in circulation. Okay, so if you take a look at the dollar bills here, and you can look at your own dollar bills too, and you'll see the numbers that are right here, 12, 9, 4, and 6, the letters next to them correspond. So if you count the letters of the alphabet, F, if you go A, B, C, D, E, F, it is the 6th letter, and that's why there's a 6 here and an F. They correspond. D, A, B, C, D is the 4th. Okay, what this means is this number 6, if I flip back to the chart here, it was printed in Atlanta. Okay, this one here, the number 9, that's the district we're in, was printed in Minneapolis. 12 was printed San Francisco, in this area. And number 4 was in the Cleveland area. Okay, so again, it just represents the currency that is printed and where it's printed at. And you can see that the Reserve Bank, according to the map I showed you too, is listed here. And again, Minneapolis is I and district number 9. Activities of the Fed. Some of the things that they do, there's 2 things we're going to talk about, is holding of reserves and clearing checks. Holding of reserves is the part of the money that is sent to the Fed from banks all over the United States. They're sent to their Federal Reserve System in their district. Banks cannot lend out all of the money they receive from the customers. They only lend up to a certain percent of the amount deposited. It's required to keep a part of the money deposited at the Fed. Okay, and this will guarantee depositors will have money to withdraw. So every bank in our area will deposit a certain percent of their money into the Fed, and that way we will have money to take out. Okay, and that is called holding of reserves. The second activity is clearing checks for member banks. Clearing is the process of paying checks and other payments. It's taking money from one account and putting it into the other. So it might be a check, or it might be a debit card, or any other activity, but you have to be able to get the money. If you pay money, or if you buy something at Lever's, you have to be able to get the money from your account into Lever's account. And this is called clearing check. It's just transferring the money from one account to the next. And it's usually done electronically. Banking in the economy. Okay. Some activities that banking does in the economy, it borrows money to build roads, borrows money to buy seed for crops, and it's just tons of different things. Deposit cash from business operations, finance college educations, invest for retirement, allows you to obtain money for a mortgage of your house or whatever, process credit card transactions, helps you save for a vacation. Your deposits make this possible. The savings you and others deposit make banking services possible. The money doesn't just lie idle, waiting for you to take it out. You are helping the economy grow. So by putting your money in the bank, they use it. You can still get it out, but they use it to do a lot of other things. Types of financial institutions. We're going to take a look at the different types. There's many types of what are called banks. One could be an ATM, credit unions, and just regular banks. We're going to take a look at 2 different types of financial institutions. The first one is a deposit institution. And this one is one that you're probably going to be the most familiar with. They accept deposits from people and businesses and use them to finance their businesses. They're like commercial banks, savings and loan associations, and credit unions. So they take deposits, money from people and businesses, and uses it to finance the other businesses. And that's most of the banks that you know from around here. So one deposit institution would be considered a commercial bank. A commercial bank is often called a full-service bank, and that's what the majority of banks are, commercial banks. They offer a wide variety of financial services. They offer checking accounts, and when we talk about checking accounts, it's not only writing them check, but using a debit card that goes along with that. Provides savings accounts, and they make loans to individuals and businesses. And again, if you think about your knowledge of banking, this is probably what you're most familiar with. Checking accounts, saving accounts, making loans. And there's other things that go along with it. Those are the big things. The second deposit institution, other than a commercial bank, is called a savings and loan association. It specializes in savings accounts and makes loans for home mortgages. It operates much like a commercial bank. Typically, it has the words savings bank in their name. Okay, and so basically your savings and loan associations specialize in savings accounts and makes loans for home mortgages. They also provide other things for you too. Credit union is the third one we're going to take a look at. And again, we're still on the deposit institutions. It's user-owned, not-for-profit corporate financial institution. People in the same company or government agencies, labor unions, and professions often form these. Sometimes you'll have credit unions that will involve a lot of farmers in the area, and they join into a credit union. A lot of times they'll get interest rates that are a little bit lower by being part of a credit union. It's mainly for savings and home loans. An example, the Fargo Public Schools have a credit union. Again, it's user-owned, and it's a banking situation where the Fargo Public Schools gets a few breaks here and there with joining a credit union rather than just a regular bank. Okay, the second type, I told you we were working on, we took a look at the deposit institution. There are also what are called non-deposit financial institutions. Okay, they don't take or hold deposits, so they're not going to take money into their bank, into their institutions. They earn money by selling specific services or policies. Okay, so it would be like life insurance companies, investment companies, consumer finance, mortgage, cash checking outlets, and pawn shops. So we'll take a look at each one of those. Life insurance companies. People commonly buy life insurance to provide financial security for their dependents. And again, this is called a non-deposit institution. They also offer other financial services as investments. So again, life insurance companies, obviously they're going to sell life insurance to individuals. Investment companies, people can choose investment opportunities for long-term growth of their money through investment companies. And they sell shares to individuals and invest in securities used by other companies. So the investment company is our second non-deposit institution. The third one is a consumer finance company. And it is a business that specializes in making loans for long-lasting or durable goods such as cars, refrigerators, and financial emergencies. They do not accept savings deposits. So if you were to go to a car dealership and want to buy a car, a lot of times you do not have to go to the bank to get a loan, but you can get a loan right through the car company because they have what's called a consumer finance company right in there. So they will help you set up a loan. Sometimes when you go buy appliances, you can finance through the store because they have a consumer finance company. And again, they're non-deposit because they do not take deposits into their bank or into their business, I should say. The next one is a mortgage company, and they provide loans for buying a house or other real estate. And sometimes people will go to mortgage companies because they may get a better rate on a loan, or maybe they can't get a loan from a bank, so they'll try a mortgage company. And they provide loans for buying houses and other real estate. You cannot deposit money in there, and you cannot open a checking account. The next non-deposit institution is a check cashing outlet. And this is people who don't have a bank account use these to cash a paycheck and obtain other financial services. You see these a lot It's in like Walmart. If you look at the front, they say we will cash your paycheck or whatever. Again, if you use a cash checking outlet, there is an expensive fee for users. Okay, and they charge you for cashing the check. But again, if you don't have a bank account, somehow you're going to have to get your paycheck cashed. A pawn shop, we've heard of those before. They make loans based on the value of something tangible, such as jewelry or other valuable items. And there is a high fee. A lot of times, if you sell something to a pawn shop with the idea that you're going to go back and purchase it again, they will make you pay for the item, whatever you sold it for, plus a high fee or interest on it. So again, we took a look at some financial institutions. We went through them fairly quick. We're going to look at them a little bit slower later on in the week, but the review is our deposit institution accepts deposits, which would be money from people and businesses, and uses them to finance other businesses. They're commercial banks, savings and loan, and credit unions. Those are the big ones. And there's a few other ones in there, but these are the major deposit institutions. Our non-deposit financial institutions, remember, they don't take or hold deposits. They earn their money by selling specific services. Okay, and that would be your life insurance companies, investment, consumer finance, mortgage company, check cashing outlets, and pawn shops. When you are selecting a financial institution, it's just like when you are shopping, you should comparison shop. For most of you at the high school age, you probably will take out your checking account in the same bank as your parents. But as you go older, there are certain things that you want to do when you're looking for a place. Okay, so you're going to take a look at services offered, safety, convenience, fees charged, and restrictions. So again, we're going to do some comparison shopping. So services offered, what you want to do is you want to take a look. Is there savings accounts available? Checking and payments accounts, loans and other credit plans? Are there other services that you want in a financial institution? You have to decide where it is or what you want out of it. When you go in to open up a checking account, you can ask certain questions if you're prepared. Safety is the second one. The Federal Deposit Insurance Corporation helps to regulate banks and other financial institutions. As you walk into the bank, this should be, I would say, on the door or the window as you are walking in. This, by being a member of the FDIC, it insures all accounts in the same name at each bank up to $250,000. So if I put money into the bank, as long as it's under $250,000, it's all insured. So if the bank fails, I'm going to get my money back, $250,000. If I put $300,000 in this same bank and the bank fails, I will get back $250,000. Okay, so that is insured by FDIC. So again, you want to make sure that your bank is insured. I don't know how many banks aren't, but that is very important. Convenience. Do you want to be able to bank online? Do you want a branch office near you? Do you want to live close to your bank, or is it not a big deal? You have to decide that. What type of convenience do you want? A lot of your banking can be done online, so maybe it's not a big deal that you live close to your bank. That's something else when you are comparison shopping about a bank. Fees and charges. You need to compare the needs with the price you pay. Are you willing to pay, for example, if your bank doesn't have free ATM usage, are you willing to pay $2 or $3 every time you use the ATM? It all adds up after a while. But again, you have to take a look at what fees and charges are attached to the checking account. Do you have to pay for your checks? Do you have to pay for certain services? The next one is restrictions. Always balance your needs with the conditions imposed on you. No restrictions. Okay, on your sheet, you are going to finish it out, and in your own words, you're going to explain the purpose of the Federal Reserve. It should be 2 to 3 complete sentences. And then there is a table at the bottom of page 4 to identify the 3 deposit institutions and the 6 non-deposit institutions.